Hello, it's Tuesday the 18th. I'm FX Blue and this is the market brief. So the UK is running the risk of a bit of a setback with the Indian variant beginning to ring alarm bells all over the show. The faster spread is widely concerning, especially with a full reopening of the economy planned for next month. Of course, another lockdown is highly unlikely, but the longer term economic prospects are currently condensed into this at-risk period while all the science brains study any and all new COVID data. Aside from the virus, we have unemployment numbers released today. We're not expecting anything too dramatic, but it should be a step in the right direction with all the recent reopening that would have needed staffing. So the data may be slightly positive for the pound. If we're going to see a bigger reaction, it'll probably be with tomorrow's inflation data though. Year-on-year CPI is forecast to rise around 1.4%, which in itself is not a concern, but as usual, it'll be the trend that will be looked at more closely. For now, sterling has held on to recent gains. Yesterday we touched 141.50. We opened slightly higher this morning, 141.75. But the direction of the dollar has been a difficult one to call recently, and the market faces a bit of a quandary over the direction of the dollar. On one hand, continuing rhetoric from the Fed suggests the dollar should remain weak for at least the rest of the year, especially with suggestion that we won't see any tapering of the bond purchase program before Q1 next year. And of course that will come before any interest rate hike. But there are also those that see a rate hike as inevitable, and their attempts to get ahead of it are providing a degree of support. However, rising inflation can no longer be disputed, and last week's data has increased pressure on the Fed, if not to act, then at least to share more details of their master plan to manage that inflationary risk. The concern is that the Treasury is relying too heavily on the dollar being the main reserve currency and a global store of value, because if, or when more likely, the Fed does need to raise rates, then that source of international funding naturally becomes more expensive with the yield. Depending on the timing of this rate hike, therefore, not only could it affect the US recovery, but it could also affect the longer term prospects for the US economy. The FOMC minutes are due out tomorrow. It's probably too early to see any serious talk about tapering the bond program or the timing of any rate hike, but it'll be interesting to see what they chatted about all the same. Euro dollar, it moved a little higher yesterday. We opened this morning around 121.80. And that's it from me. Have a great day. Seems to have brightened up a little bit. Hopefully the rain stays away. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.